3, 2, 1, go.
Good morning, everybody.
Good morning, everyone. Welcome back to
Good morning.
Say good morning, Anthony.
Good morning, everyone.
As you can tell, we have a special guest here today for our Sunday morning question and answer comment answering video. We have our friend and mortgage broker, Anthony Venuto. Anthony?
Yes.
He's crashing the party.
Good morning.
sees
Good
the-
morning. Getting used to the drive.
Yeah, it's a lot of work you're doing here, just sitting there.
And just admiring the view.
You know what? Anthony has his YouTube channel where he puts out some great mortgage content. So if you're interested, check that out. Where can they find you at?
On YouTube, you can find us at In Touch Mortgages. You can Finance Fridays. On social media, _Venuto. Obviously, our website.
Finance Fridays.
Yeah.
So if someone needs financing, they should apply on Fridays.
Yes, only on Fridays.
And yeah, if you've actually watched our channel for long enough, you will see that our Finance Friday video that we used to do was Anthony's video, and that he migrated over to his new channel. So go check him out there. But so today we're going to talk, I guess, a little bit more mortgage related than usual.
We're going to lean that way.
Yeah, we're going to lean to the mortgages. So first question we have here.
These are our comments. I mean, there's some people joining us new for the first time, so maybe we let them know. These are comments that we get, comments or questions that we get on our YouTube channel. And a lot of them will prefer to just talk about it here with all of you.
Yeah. So first comment here comes from R Reginato 882. And he says, a question about mortgages issued in 2021. Everyone had to pass this mortgage stress test.
The stress test.
Why are some of those people who purchased them being hit with a power of sale? Was the stress test flawed? What happened?
That's a great question. Great question.
That is a great question.
Well, it's not for me, but I want to frame it up a little bit. So the stress test is you basically, whatever the rate is that you're actually going to be paying your mortgage, you're being tested at 2% higher, right?
Correct.
So as interest rates went up, most people should have been okay with that bump in interest rates. That's the question, basically. What happened?
Well, with the question of 2021, obviously a lot of the power of sales that we're seeing, at least anecdotally from our level, has to do with a lot of individuals that were leaning on the private mortgages, so the riskier side of the equation. If you recall back to 2021, we were peak FOMO, or entering that peak FOMO era. So
absolutely,
more Canadians were looking how to stretch their budget. So we would say, look, you're approved for 1 million, but they're like, I need 1.2, right? I need more.
That's right.
So they were really over leveraging themselves to get into that home. And sometimes the conventional banks, they weren't able to fit. So they may have had to go into the alternate space, or they needed to go to the private space. And ultimately, privates right now, if there's no equity in the home, you can't get refinanced. They're mostly working at 65 to 75% loan to value, in some cases 80% depending on the location. But if you bought in 2021 and the equities come down and the mortgage is insufficient the equity in the mortgage and the property is not sufficient, then you're not going to get financing. What do you do? Right. So a lot of them are in that predicament now.
There's a ton of people. You're right. They wanted to buy something for $1 million, but the one at 1.2 was so much nicer. So how do I get more money? Some of them took out second mortgages, right?
Some of them got really creative.
They got super creative. And even though maybe they're, I don't want to get into that whole other side of things, but they got extremely creative. Makes sense.
Can I share a quick story?
Real quick.
I had a client that came to me with a situation where I don't know how they got approved for the mortgage the first time around. Obviously, we have our intuitions on how that happened, documentation, so on and so forth. But now they're trying to restructure because they couldn't afford the mortgage to begin with. Now they're over levered on every single asset, and we can't even get them into a private mortgage. So once again, trying to think about falsifying or getting into something, there's reasons why we say you're not able to get the home, or you shouldn't be buying this property because you just can't afford. You're not even making the money.
Yeah.
So now you're paying the piper.
I think I said it before on one of our shows. We were talking about this whole funny mortgage business, funny documents. And maybe the documents might not be real, but the payments are certainly real. The bank, those are real payments being made to the bank. And if you can't do that, you're in trouble.
There's always there's two qualifications. There's what the bank will look at, and then what the reality is, which is your after-tax income, especially if you're salaried or hourly. By the time Uncle Carney takes his hand out of your pocket, what are you left with?
Uncle Carney.
Question that I just thought of right now. So, one of the big proposed fixes was, the second you link CRA info with mortgages, basically all the fraud goes away, right? That's what a lot of people were saying. And do you think it's too late for that? Because I don't think, are we seeing I know you don't personally do any type of funny mortgages, but is that still, you think that's still necessary?
Look, to be honest, the CRA thing is great. I mean, because it will obviously create more checks and balances in the sense of the banks can double check things. But here's the reality. We're always backwards looking. The CRA stuff is from the previous 2 years, the two filing years. What happens if, your salary and, you got a bump in pay? Are you unnecessarily leaning on that stuff? To what extent? Obviously, these people that do funny stuff and the clients that want funny stuff to happen, they're going to find ways around it. All it's doing is adding an extra layer of checks and balances to sort of try to catch stuff. So things that if 1 + 1 doesn't equal 2, then, there's a reason to go in and check. Will it resolve any of the fraud? It may limit it, but unfortunately, it's still going to happen.
Let me say something. You tell me if you agree with what I'm saying or not. If income is linked to CRA, it will not eliminate fraud. However, for many people, it'll instantly make it way more difficult for them to commit financial fraud, mortgage fraud, right?
Yes. It will make it more challenging because there's going to be, as I said, more checks and balances in play.
The thing is, the people committing this kind of fraud that we're talking about, I'm not sure how we veered off into the fraud discussion here, but
that might have been my fault.
No problem. The thing is, the reality is, those people committing that have orchestrated this, they're smarter than the people that trying to prevent it. That's the problem.
Well, you said about the prevention part of it. That's if they want to prevent it.
Yeah, thank you very much.
If they want to prevent that fraud.
Thank you. You heard it here, folks. You heard it here first.
Okay, so I have next comment here comes from Rudfill. Rudfill says, I'm a senior with a paid off home in Toronto. I live on a pension only and need cash flow to live a proper retirement. And I have no heirs. Is a reverse mortgage a good idea for me?
We're hearing more and more about reverse mortgages. What's your take on reverse mortgages, Ed?
Well, it's a great question. A lot of Canadians are not prepared for retirement. I think the last time I was looking, somewhere around 75% Canadians are not financially ready to, they don't have the resources instead for their home, right?
Yeah.
So now they're leveraging the equity in their home. In this particular case, the home's free and clear. Obviously, we need to understand the pension. Is it just OAS and CPP? Is there a union pension? Is there a teacher's pension? So on and so forth. Because here's the reality with a lot of clients that we're working with, it has to fit the client in the sense that how old are they? How much more time do we, nobody knows how long we have till the clock gets punched in this, on this earth. But, if you have, let's say, $1 million property and you're a certain age, you can get up to 55% loan to value. So let's just say that's $550,000. You take out $550,000, and how long will that last you? How is your lifestyle? Are you changing your budget? That's the real question. Then what happens if you live longer than expected, right? What do you do? Do you have a means to pay back that reverse mortgage, or are you going to have enough money to carry you into retirement, a retirement home? Those are really, really expensive right now. So
it's difficult to answer that question.
It's very hard.
Specifically for that person. And I know there's people listening wondering, what the hell is a reverse mortgage?
Well, the simplest way to put it is a reverse mortgage is rather than you making the payments to the mortgage, the bank is paying you. You can do it as a lump sum. You can take it all in one shot, or you can have like a settlement, like payment every 2 months, every month. You get basically, say you need $2,000 to subsidize your income. So until you run out of runway, right? Until you run out of that actual equity, they can pay you $2,000 a month on top of your pension so that you can help, live day to day, week to week, month to month.
So the bank is going to give you money, a mortgage
At a relatively higher interest rate
than a typical mortgage. But they're going to give you money. You're generally not expected to pay it back or pay it off.
Yeah.
But at some point, unfortunately, none of us are getting out alive. So at some point, you're going to pass away. And then when the home gets sold, the estate sells the home,
Yes.
Then the bank gets paid back.
Correct. And there's a time frame within that amount if you die or something happens or you want to pay it out. So
now, does this force the estate to sell the home as soon as the person on the mortgage passes away?
No, I believe it's 6 months. You have 6 months to settle the affairs of the estate.
After the person.
Yeah. And obviously it gets complicated with probate wills and so on and so forth.
I think what might complicate this even more is this person had no heirs, but I think the bigger complication might be the children, right?
I know my son's trying to figure out how to become his heir. That's what my son's trying to figure out, Anthony.
Money ruins a lot of things. Trust me, if I had $1 for every time I've seen situations get ugly with these, it's sad.
You'd have a couple of bucks.
But I mean, I guess as a word to all the viewers out there, like, look, if you're married, whether you're young or old, make sure your will's up to date. Make sure you have an estate plan, if it so be it, because once again, that just complicates things down the road. Talk to a real estate lawyer, a accountant, if you have multiple revenue streams or a corporation. Just plan it out. Don't wait till the last minute.
I've got it all sorted out. My household. I've told my kids already. It's nothing to fight over. I'm going to spend it all before your mom and I are gone. So there'll be nothing to fight over. So that keeps the family tight, right?
No, yeah, exactly.
No arguments.
Is that what I get for lunches once a week?
Yeah.
Okay, so next comment here comes from Bong Associates Analytics. And they say, I'm curious, what's the average size of the mortgage for these 4-bedroom detached in Toronto? That would be a decent indicator to tell if the people buying actually have the money or they are becoming debt slaves.
Okay, so the average price, I can tell you, for a 4-bedroom detached property in Toronto and in most other areas, the average price, we're not talking about going out, but Toronto, Vaughan, for example, it's $2 million. So this gentleman's asking, what's the size of the mortgages on these?
I mean, it's a tough question because there's so many different cases, but I think if you're buying a 4-bedroom home in Toronto at $2 million, it'd be safe to assume it's not your first home.
It's not your
right?
first
Can we
home.
make that assumption, agree on that?
Although we have had a first-time buyer buying just over $2 million. Very rare. We rarely meet these people. But you're right. It's not their first home.
It's not their first home. So we would assume in that case that you're coming into the next purchase with a fairly substantial amount of equity, that you've sold your home, whatever market it is, you're coming in. I would probably gamble a little bit and say you're coming with at least 50% of that. Like, I mean, no one's coming in with 20% of 2 million. First of all, at 2 million, there's a sliding scale. Can't just put 20%. You have to put a little bit more. So I don't think anyone's taking a mortgage at, let's say, 1.5 or 1.3. I mean, that's just not realistic. There are some outliers that will take on a mortgage that's worth $1 million.
Well, these are people with
they're doctors,
high
they're professionals, they're people that have the means to do so. But the average folk is probably going to take on a mortgage of 700, 800,000, which may seem preposterous to many, but that's what we're seeing right now with or what we've seen in the past. I don't know if that's
800,000, I guess, even up to $1 million.
Up to $1 million.
It's a big mortgage.
But I think that's a misconception that a lot of people have. There's another comment that I have here that says with 20% down payment, the buyer has to pay $540,000 as a down payment and $15,000 per month as mortgage and taxes, etc. And he's asking basically, who are these people? So I think a lot of people are under the assumption that, everyone, no matter what price bracket you're at, whether you're buying for $1 million, whether you're buying 2 million, 3 million, 4 million, everyone's putting 20% down, right? Because that's the example he gave here.
Well,
And I just don't think that's the case.
No,
a
there's
lot of
people doing 50%, 75%.
like, unless there's an inheritance there's like a wealth transfer, like parents gifting them money. I've seen everything. Like, not for anything. We had a client not too long ago that sold some Pokemon cards and came up with his entire down payment.
Pokemon.
I'm serious. He had the Charizard. I don't know what I mean.
Dad, if you
First they
throw out
turn-
my card, you owe me a lot of money, actually.
Because I threw out your card?
Yeah, you actually owe me a lot of money.
Was it the first print, 1991 or something like that?
I was obsessed with
Or
The thing is that
and then my dad.
I bought the Pokemon cards.
see,
Yet I owe him.
my investor. Okay.
look, my parents throw all kinds of toys and stuff like that would have been worth money, but who would have thunk that would have happened, right? Like, I mean, and I kid you not, I had to backtrack that down payment. And the banks asked me, where did this guy get this money? And I'm like, Pokemon cards, and like I'm just trying to show them pictures of like what these cards could be worth, because
Jeez.
how do you validate that, right? Like, so anyway, but once again, it's there's so many different strokes where these people are coming in. I've had clients that have won. They've invested in some great companies and they've finally cashed out. I mean, there's so many different ways. So it's not fair to assume that everyone's not is doing it just because they're debt slaves. Although that seems to be the common denominator of what people think.
Well, you know why people think that is because they're looking at what other people are doing through their own perspective.
Yeah.
And I can't afford it. How in the world can they afford it? Well, you know what? They're in a different situation.
Look, I
And it's hard to believe that a household does earn $500,000 a year, $1 million a year. It's like, who does that when, I struggle to earn $100,000 a year? But there's a lot of money in the GTA. There's a lot of money.
I mean,
there's
look,
a lot of big salaries in the GTA.
there is a lot of big salaries. And just to add to that point, I think it's important to not judge a book by its covers, because I know a lot of people that the average, construction worker, I mean, although there's some slowdowns right now, but they've also made the right move. They've been in the market for a very long time, right? They got married, they bought a house, they did everything, sort of in as they saw fit. And they've moved up to some pretty large homes that you would think that they're sitting in a subdivision that they're multiple millionaires, but they're just two average employees, a construction worker, a teacher, great salaries, but they're living in a home that's worth a couple mil.
Yeah.
And that's because they've been in the market for the last 35 years or 30 years. And they were able to make these little incremental moves up the property ladder to get to where they are now.
Yeah.
Now, of course,
that $2 million purchase, maybe they have
no mortgage.
No mortgage, or $400,000, a much smaller mortgage, right?
So
Yeah.
This is what a lot of people, when you look at it through the lens of your situation, it's easy to default to how can they do that? But if you're a bit more open-minded, it's how can they do that to understand what situation are they in, allowing them to do that?
Well, yeah, I just wanted to clear that up. I think a lot of people do assume that everyone's doing this on their own run. Maybe they are, but I think there's a lot of other money that comes in.
can I add another assumption?
Geez, Anthony, you just want to monopolize the show today.
No, I just think we're talking
Gee.
about like the assumptions that people make, and there's a lot of conversation right now with the Bank of Canada cutting. So I don't know if I'm getting ahead.
No,
Let's get into
Okay,
I wanted to ask. We got sidetracked.
Yeah, we'll let you ask the question.
Can I ask? Thanks for framing that up for me there.
No problem.
Anthony, so Bank of Canada has cut rates again by another 25 basis points. Surely there must be a lineup at your door, people asking for mortgages because they're ready to buy now.
Santo, I wish that was the case. Honestly, I wish it was. And contrary to a lot of people on social media that will tell you,
Now's
get
the
in
time.
now,
Yeah.
because otherwise you're SOL. It's not true. I think we last year, I'll go back to last year and say the conversation was around rate. Oh, when the rates drop, when the rates drop. Now, personally, I think it's more about sentiment. It's about job security. It's about economic factors.
which are all weak points right now. Job security, it's a weak subject. There isn't much.
I mean,
The sentiment is low, so we're
super
weak
low.
there.
How do you buy a house if you're scared that you're going to lose your job? How do you buy a house?
Put it in your wife's name.
Yeah, well, someone's got to pay the bills, right? But the reality is, even the governor of the Bank of Canada came out on Wednesday on the 29th saying, standards of living are going to change. We're going to divert off course. We're already making less than our counterparts in the United States. Productivity is down, and all that basically with the fact that now the economic conditions are so weak, the Bank of Canada with their monetary policy really can't fix the economy. They can't go in there and say, okay, we're going to fix steel, aluminum, tariffs, automotive. They can't do that. Monetary policy doesn't have that capacity.
We have very little control over what the red guy down in the States there.
The orange man, they say?
The orange man, yeah.
I mean, look, the U.S. is in protectionism, right? They're focusing on protecting their economy, and rightfully so. We should have, I'm going to say this in my opinion, but Canada should have also been looking at their opportunities on their natural resources. Businesses for the longest time were so dependent on manufacturing for the United States that we almost didn't look at other markets. And now all of a sudden we're thrown the last 6 months a tariff scare and all this conversation. And now we're trying to pick up the pieces. Businesses are like, how do I get my products into the South America? How do I get my products into Europe? Right. This is literally the conversation right now. How do we update ourselves?
Yep.
Retool.
And it's tough. It's tough to slow that. Like you're talking a project, that whole attitude of where Canada now should be focused on. That's multiple years down the road. It's not something 6 months we could turn around.
Everything lags, Santo. Danny, everything has a lag. Remember, people are like, oh, the Bank of Canada, we cut the second consecutive cut. I'm like, that's great. It's fantastic. I said, but do you remember back when we started hiking, we didn't just go 0.25% at a time. We went 50%, 1% in July. Like, so those moves take 12 to 18 months to be digested in the economy. Now we're playing this slow and steady race on this run around. And the Bank of Canada is really concerned about inflation rearing its ugly head again.
Yeah. And so this last announcement also, didn't they say that's it for a while?
Yes.
Right?
So that was something I was talking about for our talk on our channel on Friday, was literally that they're at what they call their neutral rate, where in a nutshell, it's where they believe the economy and inflation should remain pretty stagnant. So there's not going to see too much of an increase on overall headline inflation, medium core and trim, obviously. And the economy is basically hovering. They're going to be sort of playing a balancing act. So, and they've also released their MPR, their monetary policy report, where the outlook is beyond abysmal for the Canadian economy, at least in my opinion. I mean, that's their forecast. And then once again, it has to align with their forecast. But the Bank of Canada is prepared to move if they need to. But if they do drop it too low, are we just basically deferring inflationary scares in the future and higher rates?
It's complicated.
It is.
There's no set answer.
This actually leads into our last question here from Ron Bonora. And Ron Bonora says, if you think the problem is large now, wait until the mortgage cliff comes in 2026.
The mortgage cliff is 2026 when the mortgage cliff comes. Is it the second or the third mortgage cliff that we would have had already? Because I don't remember the first two, although we've deferral cliff. We've been talking.
That was during the pandemic.
We had a deferral cliff, which nothing happened.
No, I think everything everything comes in cycles. So we were look, I can't lie and say we weren't apprehensive for a lot of our clients that had mortgages that were coming up. But a lot of our clients that are renewing now, what we're hearing is it's not as bad as they thought when they were going to renew their mortgage. And once again, that's relative to your income. And I'll elaborate, I'll unpack that a little bit more. A lot of our clients who are renewing their mortgage 2025, 2026 may have had a mortgage that was sub 2%. The other thing is they might have a variable. So they had a variable rate mortgage. depending on the type of product, they would have saw their amortization skyrocket, but then come back into balance. So that eased a lot of concerns there. On the fixed side, a lot of people that got into the mortgage, got their new mortgages, they've paid down a significant amount of their principal because the rate was so low. They've also increased their capacity to earn more, right? Certain sectors, most sectors have gotten some pay bumps over the last 5 years. So they're able to offset that. And obviously the budget, they're potentially updating their budget. So, I mean, the shock itself, the payment shock on those renewals are not as significant, obviously, depending on the size of your mortgage. If you have a massive mortgage, it goes without saying, but if you have a smaller mortgage, it might be a $400, $500 difference, which is still a lot, but not as much as some $1,500 to $2,000 changes. Plus, the rates have come down a little bit.
Yeah, I think that $400 or $500. Like we talk about this all the time. Everyone will do everything they can to keep their house. So whether it's cars, whether it's vacation, whether it's whatever else, wherever they can get that $400 from, they'll do it.
But it's also, a lot of people think, interest rates, let's just say they're doubled than what they have now. That doesn't mean your payment is going to double.
No, some of the situations we've had with our clients in that renewal conversation is potentially re-amortizing their mortgage to make their payments align closer to what they were originally.
Right. So re-amortization is...
Sorry. Yes. Yeah. Good point. Re-amortize. Let's say you took on a 25-year amortization to begin with. You can potentially go back and refinance if there's enough equity in the home. Obviously, if it's insured or non-insured, then what you can literally do is take that amortization and escalate it or increase it back up to 30. Now, this may be counterproductive for some, but once again, we're talking about cash flow, right? We're talking about families. And for the next 3 to 5 years, you bring up your amortization. Then once things sort of come back down, if they end up coming back down or you recalibrate, then you can always reduce your amortization the next time you renew your mortgage, right? And bring it back down to, say, 15 years, right? So there's ways and strategies, paying off some of your high interest card debts to free up some of that difference that would make up your $500, right? Because like you said, you have a car payment at $599, you have a line of credit at 7%, or you have something at a higher amount, you go back and restructure it.
Yeah.
Are there 75-year mortgages, 75-year amortization?
I wish. No.
100-year amortization?
Not in Canada.
We are running a bit late now, so we'll end it here. Anthony, thank you so much for joining us.
Thank you, buddy.
Santo, thank you for having me. Daniel, thank you. It was an honor and a privilege to be on the show.
This was awesome. Now we got to go get lunch. So we will, we'll see you guys again soon. Leave your comments in this video here at the bottom of this video if you'd like to be featured on our show. And enjoy the rest of your Sunday.
Have a great day, everybody.
Thanks.